Hi, everybody. Welcome to another edition of Zach's Live Trader. I'm Dave Bartosiak with you as always. And today, my friends, we've got a twofer. That's right. First and foremost, we're going to kick things off here with Amazon, the online retail giant ran by the genius of Jeff Bezos. But once we're done here, don't go running away and hiding under your desk, because at 1:30, right when we're done, we're going to kick things off again with Google, G-O-O-G-L. That one, my friends, will be part of our Zach's Live Trader Premium service, which you can only get by signing up for, well, Zach's Live Trader and our premium YouTube channel for $9.99 a month. So if you want to hear more about that, check us out. Shoot me an email to livetrader@zax.com. So I can tell you all about the premium feed, what you get from that one video a week, but plus the video review, the good, the bad, and the ugly, where we review the trades that we have on and give you ideas on how you can get out of them if you're still in them, and give you strategies on how to trade on those expiration Fridays. So fun stuff there. Now, today, we're going to kick it off with Amazon, because this stock is bonkers. And when it comes to earnings season, it's one of the most exciting options plays that you can make. I've literally seen people turn $6 grand into $100,000 on this day. I have, only to squander it. Oh, man. But so we're going to talk here about Amazon. Let's dig in. As always, I look at the price consensus and EPS surprise chart on Zax.com. Then we take a look at the detailed estimates page to see what other analysts out there are thinking about Amazon and give you our Zax rank. And then last, we dig into the options chain, put together a bullish strategy and a bearish strategy, and then I give you my humble opinion on which of those I believe is going to be the best for Amazon's earnings. Now, you don't have to agree with me. You don't have to trade with me. You can just look at me and laugh. I don't care. But I want you guys to learn a little bit more about options trading. I want you to learn about how to do this analysis for yourself, and that's the purpose of the video. So while the picks are fun and are a great bonus, there's much more to it, okay? All right, so why don't we go ahead here on Zax.com and dig into our price consensus and EPS surprise charts. So, as always, the black line represents the price. This price corresponds with the right y-axis. Now, the little arrows you have, the red arrows, losses. Green arrows, earnings beats. Losses, misses. Earnings misses, okay, are the red arrows. Green arrows are earnings beats. Okay, now, if you see these multicolored lines here, these correspond to various years. And these represent the evolution of our Zax consensus estimates over time. Now, something to point out here on Amazon. First, in the early stages, well, heck, not even early stages, let's just say a few years ago, we didn't care so much about EPS on Amazon. It was like, if they make money, great. If they don't, I don't care. It was all about revenue growth for Amazon. That's what we were all concerned about, was revenue growth, revenue. So when you are looking at this earnings report tonight, tomorrow night, sorry, it's going to be all about the revenue. So you got to look at the revenue too. The price consensus and EPS surprise chart here is going to talk mostly on EPS, focus mostly on EPS. Obviously, revenue is correlated to EPS, right? But it's not, while it may tell you part of the story, it doesn't tell the whole thing. Revenue doesn't lie, but it doesn't tell the whole story, okay? So there's a lot of moving parts to this. However, back to the EPS. So one thing to look at here, though, is the gaps between the lines here represent EPS growth. So something significant has happened over the years. If you look into the end of 2014, this is kind of the last of when we stopped caring about EPS on Amazon, right? Last loss, pretty much. So here's a zero line, so basically just below zero. And then now there's some growth, right? And we've kind of baked in this growth and expected the growth. And when these growth estimates spike, the stock goes up, which is good. And you can see this overall sort of tracking along with the revenue, with the EPS growth, excuse me, here, right? The other thing to see, when they beat, stock goes up. Beat, stock goes up. Well, this was kind of later, but beat, it goes up, beat goes up. When they miss, watch out. Beat, 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 okay? So, just beat it. When it beats it, it's good. If it doesn't beat it, it's bad. All right. And this is on EPS, the actual report. Now, this is going to be different from just the guidance, right? And granted, we're not really getting anything on guidance just from this chart. But I suppose if I dug in a little bit further, I bet you that they were kind of in line. Okay. They went along with each other. Okay. So Amazon has expanded, right? I mean, they used to sell books, you know. They thought they're going to put Barnes & Noble out of business, right? I think Crown Books, they actually put Crown Books out of business. I don't know. There used to be a Crown Books by Old Orchard Mall. It's not there anymore. I don't know. Talk to Crown. Anyway, but so they used to sell books and then, you know, got into pretty much everything under the sun. And now it's about the cloud services, the Amazon cloud services. Big time revenue boost for them there. That could add a lot to their EPS because the margins on that product are so fantastic. Of course, now you see they have actual hardware out there. They tried with the phone. Nobody wanted an Amazon phone. So they say, okay, let's just put this hockey puck, this talking hockey puck in your house, and you can talk to it. And I'm sure you guys have seen that with Alexa, okay? When people are talking to some chick named Alexa, there's a hockey puck in their house that talks to them, okay? But that's cool. It's like your kind of gateway to the world, right? So Amazon's doing it through Alexa. Obviously, Apple's doing it with Siri. Google's doing it with OK Google, right? Microsoft has Cortana, and back in the day, I just had Mom. So it's evolved. Mom, where's the meat? Where's the protein, Mom? So it's evolved over time. Okay. So that's the fun stuff. Let's take a look at the detailed estimates page here on Zacks.com. Take a look at what some of the other analysts are saying about Amazon. Zacks ranked #1 strong buy. Now we're going to dig into that and what that means. But value score of D, that shouldn't come as a surprise when you're talking about a stock going out trading at 142 times earnings. Growth score of A, because that's what we need here in Amazon is growth. Momentum of B for a VGM of B. Now, again, they're going to report after the market closes tomorrow. Their industry is in the top 17% of the Zacks industry ranks. So there's been a lot of momentum behind the online retailers, so that's good. All right, now let's look at why is this a 1? Well, if you look at the actual changes in EPS estimates over the course of the last 60 days, you've had 4 analysts increase their EPS estimate for the current quarter over the course of the last 60 days. 3 of them have upped their next quarter numbers. 3 have increased their current year EPS estimate. 4 have increased the next year's estimate. And then there's this one bear out there growling. There's a grizzly bear in the woods somewhere. Dropped their estimate for the next quarter down 60 days. Dropped it for the current year. So what sort of impact has this had on the Zacks consensus estimate? Well, this is kind of interesting here to see that 90 days ago, we were actually looking for 96 cents of EPS in this quarter, but 60 days ago, that dipped to 84 cents, increased to 85. So let's just look at the last 60 days, because obviously the 90 days has already been way priced in, but 60 days ago, 209 for next quarter, now up to 217, 577 up to 586. This is just mind-boggling here. Now, again, they throw these numbers out based on kind of current margins and all these assumptions. So $10.31 60 days ago for next year, and now 1072. But look at the jump. This year, 586. Next year, 1072. That's crazy talk. That's absolute crazy talk. And if you look at the surprises here, I mean, they have been all over the place. So I guess it's hard to be an analyst covering Amazon trying to gauge their EPS. And that's true because they reinvest so much of their money back into the business. So these numbers are all over the place, right? I mean, this is 27-cent beat, then a 61-cent miss, 46-cent beat, 64-cent beat. So it's kind of all over the place with regards to EPS, right? And that's what happens with Amazon. You're all over the place with regards to EPS because you just don't really know how much money is Amazon going to make to the bottom line because they're constantly reinventing, reinvesting, reloading, and trying to find the next business that they're going to get into so that they can take over the world, essentially. Jeff Bezos is launching rockets into space, man. Think about that. It's not just Elon Musk. Rockets into space. I'm going to get a rocket one day. But the revenue numbers, this is something I want to see. And I got this printed out, so I can't show it to you guys because it's G14 classified. But, you know, okay, so Q1 2013, 16 billion. Fourth quarter of 2013 was 25.5 billion, right? Kind of historical sales. This is the historical sales, all right? Sales numbers here. I want to go over. Is this on the AWS? This is all Amazon's retail, I think. Yeah. Anyway, so now fourth quarter last year was 35 billion, and now 30 billion, 29 billion first quarter, 30 billion second quarter. So these kind of year-over-year growth numbers are spectacular. So I think the thing is that we're looking at this consensus estimate on the revenues, and that's really where you're going to need to have most of your attention on this earnings report. So we're looking for 32.3 billion, which represents 27% year-over-year growth in these net sales numbers. Okay, 32.3, 32.7 is consensus. I guess I'm giving away. I'm not going to say who wrote this report, but it wasn't me. Consensus is $32.7 billion in revenue. Okay, and guidance is 31 to 33.5 billion overall. We think they're going to break out the AWS, which is that cloud-based service, and they're going to tell us that. So most of the estimates there are, maybe they get 3 billion, 3.2 billion out of that, which would represent like 50% year-over-year growth in the cloud-based service. And I know cloud has been big, and we've seen it from other tech firms out there. So I think that's going to be a boost in the arm as well, a shot in the arm. All right? So this is all good. Let's go ahead and dig into the options chain here. But again, if you're watching us for the first time, thank you so much for joining us here for our live feed for Zach's Live Trader. This, of course, we're covering Amazon here, and we're going to go ahead and give you a bullish trade, a bearish trade, in my humble opinion as to which one I believe is going to be the best. That's what we're going to do right now. But if I tell you about this trade and then, you're not going to know how it works out, right? You're not going to know a great strategy to get out of it if you did, in fact, put it on, or, what sort of game plan I'm looking at after earnings, right? So make sure you send us an email, livetrader@zax.com. Get signed up for Zach's Live Trader on YouTube, Zach's Live Trader, okay? Email, livetrader@zax.com. Commercial's over. All right, now let's go ahead and dig into the options chain. Of course, this works better when you put the ticker in first. We're gonna let that load. Look at the lovely Yahoo Finance front page. Wow. Just so you guys know how to get to this ticker page on Yahoo Finance, you go ahead and, enter the AMZN, and then it pulls up, and then you have a tab here for options, which you click on that tab, and then it'll pull up the front week or the most recent expiration, what's going to happen right away. And the reason why I do this is I like to open up the straddle view. So what I mean by that is you have calls on one side and then puts on the right. So essentially you have bullish bets on one side, bearish bets on the other, and it lines it up by strike price. So it's a real easy way for you to take in this information and know what's going on, okay? So this is loading. What I like to do, as always, is I look for the front week expiration at the money. And I look at the cost of the call option, the cost of the put option, add them together, and this gives me a nice rough estimate of our implied volatility. So if you look here, this is kind of the at the money, right? So you got the 822.50. So let's just go ahead and add up the cost of this call and the cost of the put. So 25.72 is what you're looking at for the cost of the call. And that's the last one that traded, and then 27.15 is where we're at for the put. So that's 52.87 right there. So you take that number and divide it by the 822.50. Okay, of course, 822.50. 22.50. Okay. So this means that the options market is essentially pricing in a 6.4% move on shares of Amazon here at earnings. A $50 move pretty much in either direction. So if you're at 822 and you're talking, a $52 move, that's $770 on the downside. and 874. Let's just call it 875 for giggles, and you'll see why in a second, to the upside. So basically 770, 875, okay? Now with a stock like Amazon, there's so many options here, so many different strike prices. I can't put, I can't put these all on one page, but if you look at the 770s, just to give you some idea, 770s are down here, and even out at the 770s, you still got puts trading for $4.91 down in the 770s. That's crazy, right? And then if you look out of the money here on the call side, the 875, even at 875, it's still $6 out of there. So very pricey, right, essentially, and that's because that's what you get. That's what you get, because this stock can move 50, 70, 100 bucks on earnings, even as big as it is. It can do it. I've seen it happen. So you tend to get options that are way far out of the money that still have plenty of premium in there, okay? And now the implied volatility of the move being like 6.4% or 50 bucks is really not that crazy for Amazon, if you think about it in the grand scheme. And if you look at some of the other companies that we've had here that we've covered, we've had 10, 11% implied volatility on a lot of these moves, okay? Now, part of what they're pricing in here is the VIX, and obviously the VIX, I think we're at 14.5 or something today. I'll have to double check. So historically, the VIX isn't really all that high either. So this is kind of all what you have to take into account when you're deciding how you're going to make a move on Amazon. Now, I've given a few trades over the last couple of weeks that have been kind of a little bit longer, longer term, kind of going out to a month later or a full month later. I think here I want to play around with the weeklies a little bit, okay? And the reason being is we haven't done it in a while, partly. And I think I want to sell premium here on Amazon. So if you're selling premium and you only have 1 day to wait, that's great. If I can bang out a 20% return or 30% return in 1 day, that's good. And on some of the other trades that I put on, like the call spreads or the put spreads, if I'm long, right, I usually give them some time for that post-earnings drift to take place, right? So I'm like kind of firm on a direction. I'm not too worried if the day of that the stock runs against me. I just kind of believe over the longer haul it's going to work out for me, right? So those are the kind of trades I like to put on that are longer term. But here, it seems like a short, let's get a short little pop here, okay? Let's roll the dice a little bit and find something short. So what I'm going to do, though, and you guys will see why, I'm going to go one by one here, and instead of putting the straddle view on, I'm going to go with the list view when I'm looking for exactly which one of these trades to put on. Okay, we're going to go list. And the reason why is I want to show you guys kind of the bid and the ask that we're looking at. And you'll notice that there's a little bit of a spread. Okay, so there's a difference between the bid and the ask. Obviously, it's always there. But in some cases, they're wider than others because you have basically the price at which new buyers are willing to buy and the price at which new sellers are willing to sell. So obviously, you're selling something, you want to sell it for more, right? And if you're buying something, you want to buy it for cheaper. That's how it works. So you have a difference in this bid and the ask spread. Now, normally it's not that big of a deal when we're doing a lot of these stocks, but when you're talking about an $800 stock, it's a big deal. Okay, so first, I'm going to look at a bearish trade on Amazon by selling premium. So the way that you would be bearish here on Amazon would be to look at the call options and be short a call spread, okay? So since calls are basically bullish bets, if I'm selling a bullish bet, I'm bearish, right? See how that works? Okay. So let's take into account this number that I was saying is being priced in on the upside, and that was at 875, okay? So let's go all the way out here to 875. So this is kind of the, and this is what I'm going to do. I'm going to be fancy, and I'm going to use a highlight. I want to see, I never used a highlighter before, folks, so this is some, yeah, that's why I don't use that. I think that was an eraser anyway. Okay, scratch it. Just look in this realm, right? Let's just zoom in on 875 and later, okay? And just see what we've got going on here. So here's the volume so this is how many of these contracts were traded today. So the most popular kind of in this range is the 880s. 535 of these contracts have traded. The other number here that you have on the right is the open interest. So this is essentially like the amount of open contracts that are available, or liquidity, or kind of shares outstanding is sort of how you can look at it, right? A basic measure of liquidity. So there's 1,100 contracts. So this is a popular sandbox for people to play in, is these 880s. But you also have 900 at the 875, which is what we were talking about, and 1,000 at the 890. So I think when I'm putting together a trade, this is something I like to look for. And now I see where, you know, where people, what sandbox people are playing in right now. Okay, so I do see that. All right, now, if I want to be bearish on this, I like to sell some of this. So one thing that I can do is, for sure, I'm going to sell this 875, because remember in our analysis we said, it's going to get there. That'll be kind of, that's the most that the options market is pricing in, is this sort of move, right? And that's to the upside. Now, granted, of course, there's nothing stopping the stock from blowing through that, but I still like to use that as a nice little benchmark, okay? So I can sell this. Now, I didn't want to just look at this last price, right? That's the last price. That's great, but I wanted to be a little bit more accurate here. So here's the bid and the ask. So the 615 to the 655. So that means there's a 40-cent spread in between the two of those, right? Between the 615 and the 645. So if you're trying to put a trade together here, what you got to do is essentially just go in the middle of that. So if you look at, and you basically say, okay, 635, right? And that's sort of the number that you want to use to try and get filled on something like that. 635 would be how much you would ask for trying to sell that, okay? All right, so there's that side. So I'm just going to circle this one now so we're not concentrated on the rest of the market, what's going on. Just this. Okay. So I'd sell this side, but I don't want to have that unlimited risk here, right? Because if this starts to run away and Amazon for some reason goes above 875, you're going to be on the hook for everything up and above 875. And that's a lot, right? So I'm thinking on the flip side, what you do is you go ahead and you buy a call, right? So this gives you protection on the other side of this. So what if we took a look at the 880. So there's the 880. All right. So now what does this look like? So again, 635 is what I'd be looking to sell that 875 contract. And then again, I get in the middle of the spread here. So let's say 530 is the middle of the spread here. So subtract the 530, then I'm going to have to pay for that. So that's $1.05 that I'd be taking in premium on this trade. Now, my risk is $3.95. That's the difference in the strike prices, the $5, minus the premium that I took in, okay? So I would have $3.95 at risk. So that means on this trade, I can make 26.5% on this trade, okay? Now, that doesn't sound fantastic. Well, if it doesn't sound fantastic, you guys got some high expectations, man. Anyway, so 26.5%, but when you think about it, this is a trade you can put on today and it's going to expire on Friday, okay? That's like 2 days away. That's a very quick turnaround to get 26%. And also, what are the win parameters for this? Is shares of Amazon would have to close below $875. The stock's at $825 right now, or it's $822 right now. So you're talking $50 out. As long as it doesn't move more than $50, you'll make 26%. That's a decent bearish trade. Okay, now on the flip side, let's look at the bulls. So the bulls are going to do something very similar. Again, we want Amazon to go up if we're bullish, or let's just say we don't want it to go down a bunch. Remember the bottom of this range that we were talking about the market was pricing in, and that was $770, okay? So if we look at the 770s, and again, the middle of this, 510, okay? 510 there. And then the 765 here. So you got a 30-cent difference there. So 15 cents, so that's 410. So 410 there, okay? So now what this looks like is even cleaner and neater. 510 by selling the 770, 765. But then buying 410 for the 765 put. So that's $1, right? And then you would have $4 at risk. So obviously 25% rate of return is the potential on this one, okay? Just in a few days on a bullish move in Amazon. Really not a huge bullish move, just a not terrible move, right? Just don't be terrible. So, in my humble opinion, should you be bullish or bearish heading into earnings for Amazon here? Got to be bullish on Amazon, and I'm not super bullish on Amazon because I don't think this thing is just going to break off and run away and go to 1,000. It could. Who knows what Jeff Bezos is going to have to say, right? But the thing is, with the options market pricing in a $50 move, I just don't think that Amazon is going to go down $50, right? So as long as they don't go down $50, I can make 25% on this trade. I know it's got a directional bias because that's what I do here, and that's what I'm going to do. So I'm looking at this, pick up 25% in a couple days on Amazon. Sounds nice. Sounds nice to me. So there you have it. Questions, comments, concerns, livetrader@zacks.com. Be sure to check us out. You'll go ahead and get on our distribution list so you'll know when these videos are happening. Plus, you can hear all about Zach's Live Trader, which is going to be coming up now in like 3 minutes because this went a little longer than I expected, but that's okay. So join us for Google coming up. Well, it's Alphabet, right? Join us for Alphabet, livetraderzacks.com. Check us out in 3 minutes. I'll see you guys in a few. Thanks so much.